Futures trading is risky and can result in substantial financial loss. Never put a futures position on without a stop-loss order in place.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Well, you know I have trading rules. I stick to my rules. I stick to my guns at all times. I almost never sidestep one of my own rules unless it just calls for it at that moment in time, but it's a rare occasion. And like I said in my last video, lots of times I never trade the day before a major holiday, and lots of times I won't trade the day after a major holiday. Well, so happens that I have no trade setups for tomorrow in the S&P or really in anything else. I've seen some great stuff, guys. Take a look at the grains. Take a look at how the large traders are starting to switch to the long side. That's getting interesting. If you guys are with me, still hanging on our soybean grain scale, you know, we're doing okay with that. That's on its way back up. Maybe that'll give us a little bit of our powder back. Let's see what happens on that. But my point about not trading before or after a major holiday, especially before, first of all, there is nothing wrong with having a day where you don't trade, because you know what? The markets will still be here on Tuesday. They'll be here on Wednesday. They'll be here on Thursday. They'll be here on Friday. They'll always be here. So for me, if something that I go by regularly as one of my rules tells me on a certain day you're not trading and that's that, you know, I don't care what these markets do. I'm out and I won't be trading. That being said, I probably would have traded today, but I just don't like the setup. There's too many conflicting signals. I have a good buy setup with sell signals coming in. The same thing happened on Thursday's analysis. That tells me let it all come back, let the volume come back in, and then we'll take a look at it for Tuesday. I have a couple of charts that I'll show you, and in fact, I'm going to show you a brief illustration of why you shouldn't trade the day before or the morning of, the day before they close the markets of a major holiday. I'll show you one quick chart. You'll see, you know, yes, you could have been long or you could have been short or you could have been whatever. Point being, you'll see the type of moves that you don't normally get, and that's my reason why I stay away. So let me pull in on a chart right now. We'll take a look at it and we'll go from there. An example of what can happen to you if you choose a career in trading on the day before a major holiday. This is a 5-minute bar of our beloved S&P market on Good Friday. They left the market open Thursday into Friday for a little while for traders to react to the report. 8:30, here we are trading at 14.53. 8:35, here we are trading above 14.58, traded 59, made a high of 60 for the day. If you were long, you were lucky. If you were short, there was no way out. These are regular 5-minute bars. This was a 5-minute bar within 5 minutes. That's a very, very quick move. It all actually happened within a minute and a half, but you know, it shows up on a 5-minute bar. It happened so fast, it was just there in the blink of an eye. Just a brief illustration. You know, of course you could have caught that. There's a lot of guys that do really well in those pre-holiday markets. I'm not one of the guys who likes to trade in there, so just thought I'd show you that illustration. We also had a euro currency side-by-side mirror image formation where we left off on our Friday video, Friday roundup. I would like to show that formation next. I'll show that to you now, and let's take a look at where it's going to go. You can see it right up to the minute where it's trading last. I just checked the time a moment ago before the video. So now let me move to this next euro currency chart and I'll be with you momentarily. Well, here we are at the euro currency June chart ECM7. We have side-by-side mirror image formations. Here they are. Take a look at this. Tuesday, Wednesday, leg 1, leg 2. We had a market that opened, rallied, settled. Then it opened, dropped, settled. The next day, we have a market that opens, rallies, settles. The next day after that, it opens, drops, settles, leaving a mirror image, and then almost, you know, it's not an exact science, but an almost another perfect mirror image next to it. Here you have, you know, 99.9% perfect one, and it all of a sudden lets another one pop up. So we have mirror image, and here this would be leg 3 of the mirror image from Friday, Monday, or actually Thursday, Friday, right? We got Thursday, Friday, today being Monday. So if on day 3 the market moves into the range of the mirror image and then starts to head away, you should follow it down and you should have a 2-day sell signal. If in fact we were up here and the market rallied out, you should have a 2-day buy signal. The fact that we have a mirror image and another mirror image side by side, I'm willing to take a gamble that if we break out to the downside, you can take, conservatively, we'll take about the low from the high point of this day, and we'll take this high instead of going to the exact high and the exact low. So we'll take this low and this high, and we'll do a little projection, and I would think that we should end up somewhere down around here. 132.5, 132.40, well, yeah, around 132.5, 132.30. That should probably be a decent guess of where we should end up next if we break out on the downside, taking both mirror images into consideration, expecting a powerful move, because a mirror image on its own merit, one of them is generally powerful. So if you have two, I would think that we should get a little bit of a move out of there. I would like to have seen it move higher with the general direction of the market. Stochastics have been pinned for quite some time. They're coming off a little, but they're meaningless at this point because of this major move. So if it worked out on the upside, then you can almost really want to take it to the bank. The fact that it's been bullish and it's coming out on the downside, you may get a quick spurt down. But at this moment in time, we are trading 133.98. That is right here, and we are showing signs of going towards the downside. Let's see what gives. It's very, very interesting. Well, ladies and gentlemen, I think it's interesting that side-by-side mirror images, I never usually see things like that. I think the projection, no matter which way, should be a powerful move. It's showing us momentarily it's heading for the downside, but that could change like that, and it could easily be on the upside. But very, very interesting, so keep your eyes on the euro currency. We've also been seeing a lot of mirror image formations lately in the Japanese yen. Very interesting. Okay, I will certainly do my homework in the S&P to come up with something nice for us for tonight's trades into tomorrow. Remember, take a look at the grains. They're really shaping up down here, guys. You know, let's see what it's going to give. You're getting some good signals about a big turnaround. So we'll see what happens with that. I'll do my homework. You guys do yours. Don't forget, use my Omni as an indicator to confirm your own homework and make sure that I'm jiving with you if you're going to go with one of my trades. Don't forget, you can contact me at any time at www.future... Oh, excuse me. I've done this before. The fact that you can go to my site and sign up now has me so confused. It's wonderful. Just go to my site, futurestraders.com. You can sign up for my flash updates database. You can email me if you want right there at the site. If you'd like my email directly, you can just email me at futuresanalysts@gmail.com. You can always call me. That's always an option with me. I'm manning these phones 24/7. You can get me at 718-351-2266. Don't forget that we are going to be doing a show in Vegas called The Money Show, May 14th, 15th, 16th, and 17th at the Mandalay Bay. I will be there. I will be there to do seminars, to meet my crowd, to meet my friends. And by the way, you guys are sending me those names about what I should refer to my crowd as. The names are great. The list is getting larger. Keep sending them in. I promise I'll read them to you as the day goes. If you are going to come to the Vegas show, please give me an email at oscarinvegas@gmail.com. Let me know you're coming to the show. I'll be prepared for you. I think that's about all I have for you today. We didn't have all that much. Remember, guys, I try to bridge the gap for you here, the gap from the days of old when you called the trading floor and there were lots of people down there to help you out with your trading, to the days of today. We bridge the gap to the future where you keep punching your orders in from your homes or your offices by yourself. You need to become very professional at that, and I am helping you. We've got a nice crowd right now. We're getting in and out of markets together. It's working well. Come join us. If you'd like to, when you're at our YouTube spot, www.youtube.com/futuresanalysts. Hit the subscribe button. That will enable you to get our videos the moment we put them out. That's about all we have for today, ladies and gentlemen. Don't forget, as always, stops are first. You place them first at all times. Stops are in, emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.